Hey, team, and welcome back to another episode of Arizona's monthly housing market update. I am Katie, and this is
Matt, and this is
Ryan. Welcome back, everyone.
What's up, guys? All right, let's
Hello.
dive right into it. We have all kinds of juicy information, juicy value to share with our audience today. So before we hop into anything else like government shutdown talk, let's talk about rates. Right?
Yeah, a lot has happened since our last update in September. The Federal Reserve, as expected, they did decide to cut the funds rate by a quarter. And just a reminder, I know we discussed this last month. The Federal Reserve, they have a dual mandate, which basically means they have two goals. One is to maximize employment, and the second is to have price stability or keep inflation low, really is what that means. So, we've seen inflation increasing since their yearly lows earlier this year. But the Fed is really focused more on the jobs market than anything else right now. And we're seeing continued signs of weakness. For example, last week, ADP, the country's largest payroll provider, they reported that 32,000 jobs were lost in September, and the report was expecting 50,000 gained. So it was a huge difference. So looking at the Bureau of Labor Statistics reports, BLS, job losses, unfortunately, they are showing signs of increasing and openings are dropping. So it's expected that the Fed will have no choice but to cut the funds rate again by a quarter on their October 29th meeting, and again on maybe their December 10th, depending on how the reports come back. They're really hoping, to turn the jobs market around. So this has had a positive impact on mortgage rates. We currently are at the lowest levels of the year. And, more cuts expected to come. We should expect to see continued improvements on the mortgage rate front.
Are you seeing that reflected in applications, or have things been pretty quiet on your end?
We have, yes. We're seeing more applications for refinances at this time. Mm-hmm. And that was for clients who maybe purchased last year when rates were really at their highest or earlier in the year. As things have come down, that's probably where our application growth has been the most. Purchase applications have still been pretty steady. But, nothing really has increased too much on that front. I know people are still kind of waiting for rates to continue to drop.
Yeah, absolutely. So I've been getting a couple of questions, or I should say we've been getting a couple of questions as to how is this government shutdown affecting real estate here locally? How is it going to affect my deal? Yada, yada, yada. And I think that we need to start at what you just talked about and those reports for the Fed, because that is going to affect things, won't it?
It will, yeah. It's impacting the shutdown is impacting a number of things with mortgages. One, we can't get those important reports. I mentioned the Bureau of Labor Statistics jobs report. That was supposed to come out on Friday, but we didn't get it. The government shutdown. So really, they had to rely on ADP, a private company, and their data. So, unfortunately, that was one thing that impacted things. Others are those inflation reports. Yeah. As we said, that's the one other thing that the Fed really looks at, and they're really needing to take a look to see how inflation's trending right now. They keep a close eye on it. Those aren't going to be coming out either. So they're going to have to look at other private places to really get more information on that. So that could impact things, and that could impact the rate cut decision in October if we're not getting any data to really allow them to make that decision. And outside of that, just, for mortgage processing purposes, it does have an impact because we have to have IRS transcripts for self-employed clients. You have to order that directly from the IRS.
Right.
Those are delayed now. Even flood insurance could be a little bit delayed with FEMA closed. And the main impact is if you're looking for a rural mortgage called USDA. It's a great program. We do quite a bit of it. It's zero down. It has to be in a rural area. Those really have to kind of halt their fund reservations because of the shutdown. So those, if you're starting a new loan, typically can't close until the shutdown is over. So it's definitely having an impact right now.
Yeah, absolutely. Matt, do you have anything to share on that? I saw your eyebrows raised.
No, I just think a lot of the things that Ryan said, I agree. And I think we're seeing that. I think, it's funny how when these shutdowns happen, one side of us is like, oh, wow, this is crazy. Feels like we've never been in this situation before. And then the other side of us is like, wait, this happens, it seems like twice a year. I just definitely think the timing of it is very interesting as far as one of the biggest ingredients to all of this, and that's the reporting, as Ryan said. So now we're not getting these very important reports that are going to have effect on rates, especially going forward to the end of the year. So it'll be really interesting how that plays out. I guess it could go one of two ways, that we emerge from this and the reports come back and it's even, there's data that's going to support lowering rates because, more jobs have lost than total, or all of a sudden, just as fast as this surprise with being less than, more jobs lost than created, could be that same flip and have a good surprise, but maybe then rates wouldn't be lowered because we saw this increase.
Mhm.
So much like the rest of the year, I guess we will just wait.
Yeah. No kidding. So Ryan, you aren't seeing any delays yet or any issues with like FHA, VA, HUD, all those kind of things?
Yes, fortunately not. We're not seeing delays with those. It's more so kind of the reports that we rely on to close those loans.
Yeah.
As long as we're getting those, which we still can, they're a little bit delayed and we have to go through different avenues to get it. But no, even for government loans, because those are still, funded by private mortgage companies. So it doesn't impact things because the mortgage insurance and the funding's already in place. So fortunately, conventional FHA, VA, that's not being impacted as much as the reports that it takes us to close those loans are taking a little bit longer.
Mm-hmm. Well, that's good. That's because there's a lot of them out there right now. So yes. I would assume that a lot more people would be screaming if that were the case. So one quick thing that I wanted to throw back to you, Matt, is inventory levels. Obviously, every show we talk about rates, we talk about inventory levels, how that's impacting the current market, the current local market right now. So can you share just a little bit since last month how we have done?
Yeah, actually, since the last month, we've stayed pretty flat. We fluctuated around 2% up and down over the last few weeks between both available sales inventory and available rental inventory. So I think that, that's a positive sign in my eyes. And one of the reasons being is if you've listened to the previous podcast, we were very much anticipating these rate drops coming. Yeah. And we were also anticipating, how is that going to affect, the public sentiment towards, their confidence in things? And is this going to increase demand on the buyer's side? And I think with everything that, was just explained with the government being shut down and all of these extra things that really weren't considered or put into what we were thinking earlier, that's kind of slowed this demand. On the other side of it, one of the things that I was a little bit concerned with was going to be the added inventory, because in Arizona, the summer's very slow when it comes to real estate sales because of the heat. There's not a lot of buyer demand, and a lot of sellers that aren't in that desperate position to sell, they're going to hold off, and they're usually going to go ahead and put their home on the market come September, October. We also saw a lot of homes leave the market in June and July that went to rentals and or saying, hey, we're going to wait for the summer to end. So that's where I was kind of saying, ooh, that's a little bit, we might see a surge in inventory, but it should be well, balanced by this anticipated demand. Well, seeing that the demand is demandy, if that's a word, is not as much there as we anticipated. That made me a little nervous, but then at the same time, we haven't seen this added inventory being added. So I think that's very, very interesting. I think a lot of the people that did maybe take their homes off the market either got them rented or decided, hey, we're not going to put them back on. But there wasn't also a lot of people that are putting them on. So what this does tell me that once this demand does kick in, which it will, it's inevitable. If inventory stays the way that it's going, we could see things decrease on an inventory front rather quickly. And that could definitely kind of push us more towards a seller's market, kind of shake things up, and probably get that buzz on the street that, hey, maybe this is time to buy. So I think it's going to be a very interesting holiday season, to say the least.
Yeah, I totally agree. And speaking of sellers markets, of course, we have our market overall, right? And then we have these individual markets that are very, very local, and they can be as hyper local as a neighborhood, But these top cities or suburbs of Phoenix that are actually in sellers markets, and I don't think they'll surprise you, is number one, Fountain Hills.
Oh, wow.
Number two, that makes a lot of sense. Number two is PV, Paradise Valley. Absolutely is usually on this chart pretty high up. Number 3 is Scottsdale, number 4, Chandler, and number 5 is Gilbert. So again, I don't think that those cities surprise you guys at all. Ryan, are you seeing, with applications coming in, are you seeing people mostly targeting those areas? Or I guess it also depends on price point too, right?
Yeah, we are seeing more jumbo loans, believe it or not, because I know, jumbo loans, they're not as reliant on interest rates. If these are pretty much more higher net worth people that have more cash on hand. So we're seeing them kind of gobbling up homes more as inventory had increased a little bit this year. But I think it's important because I sent a rate update out this morning, and conventional rates, as I was happy to see, we're at 6% right now.
Yes.
FHA rates are in the low 5s. And from what we're hearing from a lot of people, what they're saying is that, as soon as conventional loans get into the 5%, even if it's like a 5.99, 5.875, that could really trigger demand just as that news kind of comes out. That's still pretty well below the historic average of mortgage rates, and 5% is a pretty good balance in the market. So it's going to be interesting to see as we continue to see rate cuts, how that helps out with demand for, other price homes that aren't necessarily jumbo. A lot of people are thinking once that happens, we're going to see a good jump in demand for the holiday season.
Yeah. And shifts here can happen rather quickly. Would you guys agree?
Oh yeah, especially when inventory is kind of doing what it's doing right now. All it takes is a quick burst of demand in certain areas, and that gains traction very, very quickly. Especially when, even as Ryan has said, we might not seeing as many, purchase applications, but all of those purchase applications are good for 90 days. So we have seen that steady. So that, and what we're seeing on our end too is there's just a lot of people that are sitting on the fence. So I think they're kind of waiting for that, hey, is this the right time to do it, type thing. And that can really gain traction when everyone starts jumping off that fence at the same time, because then people are just as fearful of not jumping on the fence as they are jumping off the fence. So
and speaking of the fence, the lovely Tina of Cromford Report, you know how I love Tina. I love the Cromford Report. It's really just the leader in real estate news here. She said that for those that are trying to time the market, we have this conversation year after year after year, right? She said it typically takes 3 to 6 months for prices to really begin increasing once you're out of a buyer's market. So little tip there, I guess we can test it. Now that we're starting to see some of these cities come out of buyer's markets, maybe we should test that and see if old Tina's right. I bet she is.
Usually is. Yes.
Usually is. All right, guys, anything else you'd like to add? Sorry, Matt, I didn't mean to cut you off.
Oh, good. No, I think exactly what she said. And I think at the end of the day, we are heading into a unique time when you start to think about those type of indications that we're seeing these, larger cities in Arizona metro that are starting to gain some traction going into the holiday season, which usually we do see a pickup in inventory come October, November, and sometimes even December if things really gain traction. But it really is setting us up for a nice start of 2026. Now, I'm not trying to speed this year up. I know time goes by really fast.
Fast enough.
But it's knocking on the door, and it's 2026.
Yeah. I mean, I can't even believe it. It's crazy. All right, guys. Well, thank you so much. Like I said at the beginning of the episode, this one was going to be packed with value, and I think we brought the value, did we not? All right, guys. So if you want to check out any of our previous episodes over on our YouTube channel, it is at Team Evo AZ. That's our handle. Scroll down. You will see this playlist as the top playlist. It is that important. It has that much value. If you prefer to listen podcast style on your favorite podcast platform, do a quick search for Arizona Real Estate Radio. There you're going to find us. Click the bell, get the notifications, downloads, rate us. That's really helpful. We get a couple of recent ratings, which was really great. Thank you very much out there. I appreciate that. We all appreciate that. And we will see you next month. All right, guys. Bye-bye.
Bye, everyone.
Bye, everyone.
Looking to buy or sell in Arizona's hottest neighborhoods? Meet Team Evo AZ, your Arizona real estate experts, driven by data, powered by passion. Meet Matthew Lambert, and Katie Holly Lambert, the powerhouse duo behind Team Evo AZ at eXp Realty. With their talented team of agents, they're making Arizona real estate personal and powerful. Trusted, tenacious, Team Evo AZ. Team Evo AZ offers full-service real estate, powered by strategy, experience, heart, and a passion for helping people move forward. Ready to make your move? Visit www.evoaz.com and follow us on social media to connect with us.